So what is going on with the market? S&P is going sideways, Bitcoin has dropped by more than 50%, and the US dollar isn't moving that much anymore since February. First, let's look at 2025, how it has finished. It has finished as one of the most uncertain years of the last few decades. Clearly, it has been because of Trump doing yo-yo with tariffs. He also got himself the name of Taco Man, which stands for Trump always chickens out. And it's just because he is always doing the same thing. He's first threatening a country with tariffs, then giving them a deadline to have a deal, and then when the deadline is reached, he just rolls back and say, "No, we're not putting tariffs on them. We're gonna have negotiations, and it's going to be a great deal for the United States of America. We have a great nation, great country, China." Which also implies the market isn't really moving anymore whenever something is related to tariffs just because of his behavior. Now, considering a little bit about geopolitical, we also have a little bit of tension between Iran and USA. To remember, in late 2025, there have been several protests in Iran, and these protestants have been severely repressed by the Iranian government. Then Trump threatened them to use military force if they weren't stopping that. Then he proceeded to deploy even more naval and air assets. Buildups have reached a level we have not seen since the last Iraq invasion in 2003. The goal here is really to reach a deal with Iran to prevent them from having a nuclear weapon. But obviously, everybody knows how the Tacoman is acting, so market hasn't really moved to that. Also, there was the kidnapping of the Venezuelan president Maduro, but eventually didn't create a lot of movements because the people were just so happy about the idea of being saved by Trump from this kind of dictator-like president that, well, eventually it really just didn't move the market. Everybody kind of, well, like, meh. Right now, negotiations with Iran are pursued. Trump gave them a deadline by the last day of February, but as we know, Tacoman probably, obviously, he's just not gonna do something and it's gonna give them, I don't know, maybe 2-3 months, I don't know. All we know about that is the Iranian government is saying the negotiations and discussions at the negotiation table are very encouraging. So that's pretty good. Now in February, the World Uncertainty Index got released and it was pretty bad. We've reached a level that has never been seen for the last decades. It was higher than during COVID, higher than during the 2008 subprime crisis. It was higher than during the 9/11. How this index works, it simply counts how the word uncertain or any variance is written in a quarterly EIU. And just like that, this clearly gives us a hint about why the S&P isn't moving anymore. Now also in January, Donald Trump officially announced that Kevin Walsh is going to be the next Fed chairman. This was clearly priced in. Okay, more than 70% of participants priced that he was going to be the next Fed chairman. Everybody also know, because he has been nominated, he obviously is not going to hike interest rates. If he would have talked about hiking interest rates, President Trump wouldn't have chosen him as the next chairman. So his nomination was clearly priced in, and right now the market anticipates further rate cuts. Now, the effect of those rate cuts isn't really priced in yet because they are not 100% sure. The market is thinking like it's going to have 2 more cuts during the second semester of this year. So usually market has kind of troubles to anticipate something if it is from, not from, if it is going to happen in more than 6 months. It's considered kind of random if it's going to happen or not. So technically right now, it implied the S&P 500 should still go up. He's also well known to be pro-crypto, which is kind of surprising because when you look at that, everybody 1 month ago and even 2 months ago knew he was going to be the next Fed chairman. And eventually, the Bitcoin went down, and right now it's still going down, which kind of not makes sense if you just think about it. So why would Bitcoin go down right now? There are a lot of theories about why Bitcoin is going down right now. And one of the most, in my opinion, reliable, most probable cause of all that is just the uncertainty. Bitcoin is considered a risk proxy asset. Even if this goal of creating Bitcoin was all about creating a new currency. It actually is used as a risk proxy investment. And because of all the uncertainty, just people wanted to allocate their funds on more safe investments like bonds, treasury bonds. So they decided to sell a little bit of Bitcoin. Now, for the last few days, and I really want to emphasize that I'm talking here about Ethereum, it has shown some really encouraging stats. We can see that investors, typically institutional investors, were really bearish in the beginning of the year, and it has shifted more and more toward the bullish side. Okay, they are being more and more bullish, and on Ethereum, they seem to be clearly bullish, while retails are still bearish. This all together can be a signal of a future consolidation, but not really a clear reversal yet. Now, related to AI, a few days ago we had the Citrini report, or Citrini, however you say that. This report states that by June 2028, there's going to be a massive crisis caused by AI, who will create a huge unemployment rate, over 10% in the US, because it would eventually have the impact of laying off a lot of white-collar jobs. Now, because this report is just 2 years too early, market hasn't moved yet to that. It's just more interesting to look at the raw data, okay, the unemployment rates, the NFP, to really have a broader idea about how the economy is doing right now, than to try to anticipate what is going to happen in 2 years, because over the 2 years, market can still go up. Now, in early 2026, also a very important thing that is related directly to the S&P is the number of inflow and outflow, considering the US stock market and the international and emerging markets stock market. Now, before January, for the last 9 months, we have seen that the outflows from the US equities have risen. More people decided to sell the US stocks, while inflows on emerging markets and over USA stock markets, well, they increased. So it seems that people, institutional buyers, are more interested by other markets that could potentially have it easier due to tariffs. So it's clearly obvious what is going on. Simply, institutionals are simply not really believing that 2026 is going to be a better year than 2025, and they just see emerging markets as more sure than the US market, which is really sad considering it's supposed to be the biggest market and the more sure, the most stable market of the whole world. So clearly here we are all really understanding something that maybe wasn't obvious yet, but certainty but volatility is really something institutionals don't like. They don't like when they are not sure. And so they would rather invest in something that can do about 5% per year and not move than invest in something that can do 40% per year but lose 60% over a year. Now, from a technical perspective, if we look, for example, just at the S&P 500 to see what has happened since beginning of January. But beginning of January, we still had an uptrend. We started to fade this trend. It started to be weaker and weaker until we started to go down, just waiting a simple correction. Then it got up, back up, and it started to range. From that very moment, we entered clearly a range structure, which means the market is just going sideways. There's no trend clear. We're not really 100% sure that the market is just going to go up or down. So what can we really try to understand with that is that actually the market can still go up, but it can also go down. So what should you care about? Well, it's about the risk to reward ratio. Okay, considering the stock market have risen a lot since April, we are now up by 45% over what's simply a year. That is a massive movement. And so considering what could happen, what if we go up, what if we go down, what is the potential movement? Well, a potential movement will be a big correction of maybe 8-11%, maybe a bear market of 20% or more. Now, considering an upside movement, what can we see? Well, from here, just a plus 10% would just sounds incredible. And that is why I consider the risk asymmetrical. I consider the risk of a potential downside movement worse than the reward of a potential upside movement. That is why I will not recommend anyone buying stocks anymore. I consider that you should have been there before, and right now it is time for those who have bought to start selling. Now, if you have a plan, a retirement plan of always buying and not selling, I just recommend you to buy less amounts of stocks and to wait the next bear market, to increase your exposure to the market. Because right now, increasing your exposure really increase your risk and doesn't really increase that much the rewards. Considering the market can go down by 20% and over a year can only go up by about 11% if it makes sense. Here, the risk to reward ratio is just really, really big, knowing that we've already got up by about 45%. Now, some people might say, well, you're not really taking the last high we had before all those tariffs. Well, if I look at the last high, okay, if I really look at the beginning of January, for example, to actually make sense with that analysis, okay, over a year, well, how much was the movement? Well, we've done plus 17%, almost 18% over the 2025 year, which is clearly a really good year, and hoping for more is just becoming irrational. When you are investing, the thing you really don't want is to lose money. You are okay with losing money, but if you have a possibility to not lose your money and to not lose too much, you should always aim for that. Okay, that's what institutionals are doing. That's why they are selling so much of Bitcoin right now, and that is why they are buying back some Bitcoin. I'm gonna do the technical analysis too here on Bitcoin. Now here is the chart of Bitcoin on a logarithmic perspective. As you can see, I don't think the market has reached its peak yet. I think we're just going to have a really big correction. Okay, some people might say it's a bear market. I don't really consider that a bear market. If you look at that, we are down by 52%. We have had worse, okay? So that's why personally, I'm not really that bearish on Bitcoin. I consider that we can have a bear market if there was no top like we have been used. I consider those tops like euphoria tops. Okay, these are the tops where everybody is greedy, where everybody is just going nuts about making money. So typically, since the beginning of this video, I'm telling you what I would not recommend you to do, because I'm not a financial advisor. I recommend you to do your homework. But considering what I am doing personally with my money, I'm personally selling my stocks and buying back some altcoins because I consider them the downside potential very reduced and the upside potential considerably bigger than it ever has been. Now, this is all really related to the way I'm invested, okay, to all the things I do, to all the things I know. That's why I'm not recommending you to do anything. I just want to be transparent and tell you what I'm doing. That's why I don't recommend you anything. Okay, I'm not a financial advisor. I'm just trying to be transparent and tell you just what I am doing with my own money. Now, considering gold, I know a lot of people are really interested about buying gold. I'm just going to just show you the chart, okay, on a monthly basis with a regular, okay. This has been Bitcoin in the 80s, okay? Increase completely massive over the course of 10 years. Then big drop, minus 66%. Here again, from 2000 to 2011, 680% at least. Yeah, 685%. This also has lasted for about 10 years. Okay, then boom, we had another 44%, something like that, degrees. And then from the bottom of 2015 to right now, 2026, we are up by 431%. Again, it has been more than 10 years. Looking at that from that perspective, do you really think this is the moment to buy gold? I will never tell you to buy gold right now. So that's about it. I hope this video helps you to understand a little bit more what is going on with the markets. Everything we know is just we need something to know where the market is heading. Okay, right now nothing is happening, so the market just doesn't have any clarification. It's waiting for signals. It's waiting to know if it should go up or down. So have a nice day, every one of you.